All right, looks like we're live. Another edition of Top Trades. Enrique, so good to see you. Let me check my notes real quick right here. We have the election gains are gone, the post-election gains as of right now. Let's see. Crypto, interesting situation with crypto over the weekend right there. We had some crypto shenanigans from the administration too. We have Nvidia not playing nice. I think it's down $1 trillion now from your big call back in December.
Yeah,
So we've
yeah.
seen that. The
Almost
market,
exactly 1 trillion, by the way.
there
Right
we
on
go.
there.
The
Right.
market's
Yeah.
selling off again. Is Orange Man bad? Is he doing this on purpose? Are we going to get 7 rate cuts this year? Where would you like to start today? There's plenty to talk about.
Well, look, I want to be careful. We don't want to turn this into the macro show.
Sure.
And, we're here all to pick stocks and make money on stocks. That being said, the market is being driven a lot by macro economics right now. And so, I'm just going to share one viewpoint on the macro side, and bring it into the market. And I'll try to keep it relatively short. Um, I've been confused by what the Trump administration has been saying about these Mexico and Canadian tariffs, the 25%. And Lutnick, the Commerce Secretary, was on CNBC this morning, and over and over and over, he just said, it's about fentanyl, it's about fentanyl, it's about fentanyl. And I'm just sitting there thinking, and I'm going, well, with Mexico, I can get that. But with Canada, it just doesn't make any sense to me. Like, I mean, let's just be clear. There's they've been 40 pounds of fentanyl come over. There's more fentanyl going from the US to Canada than anything else. And Lutnick also is talking over and over on that presentation. You can go on CNBC online, and I'm sure they have it, about how on April 2nd they're going to do the trade tariffs. These are the fentanyl tariffs. And I think that what they're actually trying to do, I think the end game here, believe it or not, is China. And Trump originally said he would go to a 30% tariff on China. He just did another 10. And I think on April 2nd, I'm going to make a big prediction here. I think he goes to 30 on China. And I think he drops a bunch of the tariffs on Mexico and Canada because he's going to get them to agree to go to 30 on China. So now, if you have, I don't really think he cares about domestic manufacturing. And so he's going to ask for three things, one of which he's already gotten a lot of: fentanyl relief from from Mexico and Canada. Canada's already fine. Mexico, he'll get more. He's going to ask for more material reshoring into the United States. But the big one he's playing for is, I think he takes all of North America and you've got a 30% tariff against China, which, because he wants to, China has been sending fentanyl here. It is absolutely an act of war. And it's the other superpower in the world. Canada and Mexico are not. And so I think this is all part of the strategy. Now, some people will go, oh, he's not that smart. He's not that strategic. I don't know. Like, I mean, I love him, hate him. I think he's an incredibly narcissistic individual and with a ton of ego and a lot of negatives that I don't personally like, but he's pretty strategic. And so what does all this mean for the stock market? Okay, let's bring it all back. So, oh, great, Enrique, you've got this idea. He's using this as a negotiation to get all of North America at 30% tariffs in China. We could go through what all the economics of that means, et cetera. I mean, I'll tell you what it means for the stock market is it means we're okay. And, I'll give you a couple of things to think about. We've been in this bull market since 2022, which is once the post-COVID hangover ran off.
Mm-hmm.
Earnings growth is good. Rates are fine. In fact, pull up the rate on the 10-year. Trump said he wanted lower rates. Well, now they've done nothing but go lower since the inauguration. We can argue about whether they're going lower for good or bad reasons, but they are lower. Inflation's, as of right now, fine. And we'll see if these tariffs actually play through, because I don't think they will. Money supply is decent. And so I think what we're seeing is just a normal good correction in the market. And the fact is, we hadn't seen one. The last real extended correction in the market was in the summer of 23 into October, where we went below the 200-day. We saw a flurry for the Japan carry trade last August. But I'm going to tell you something. Let me ask you. So let's talk about it, because I think one of two things is going to happen here. Either this market is going to Japan carry trade, we're going to V right back, or we're going to be in a 3-month kind of, which we're already a month into, consolidation like we were in 23. But let me ask you a question. How many days ago was the S&P 500 and the NASDAQ at an all-time high? How many trading days ago was it?
Not that many, right?
7.
Yeah.
So I have sentiment indicators, and we're going to go through these in the Maverick tomorrow. We've got sentiment indicators that are at spots that when they've been here for the last 30 years, the market's bounced every time. And I think there's a plan. One last thing I'll say about the and you and I were talking about this, because now there's these rumors of like, hedge funds are deleveraging and we don't know all this. Or once the deleveraging happens, how is it? I mean, I'll tell you something though. We never know how much hedge funds are deleveraging or who's selling or what, but we do know something. I know price, and I know RSI, and I know sentiment indicators, and they're all indicating we're getting close to a short-term bottom for sure. We're 50-75% of the way there. And by the way, in the Maverick, back in August, I went in off of that and bought a ton of stuff. In the Maverick, we've been very, very slow to buy. Like we've just been kind of we're getting ready probably to buy a lot more. And the reason is I'm going to tell you that even in the bear markets, we're now at sentiment and oversold levels where the market bounces. So I don't think we're in a bear market. 50 and 100 day is still above the 200-day. Like, there's nothing that would indicate where the economy's still growing. We can talk about that GDP print if we want. The Atlanta Fed, it's not even a GDP print. Mm-hmm. But we're getting to the point that you buy the bounces. And, I was telling you, I was joking. I've got this account I call the tactical trading account, which is like my IRA. And, long story, it's not that big of an account. But I swing the whole thing. Like I'll be 100% long TQQQ, which is the triple leveraged NASDAQ. Pull that up right here. But it's in bulk TQQQ. I just bought 25% position in TQQQ about an hour ago. And, again, because what you can, we're now have gotten so oversold that counter trend strategies that work in a bear market we're that level of oversold. So I don't think we're in a bear market. Maybe we are, but it doesn't matter. Now I got stuff that's working, and I'll just give one last thing about what I found so interesting about buying the TQQQ. I was thinking this morning, you know what companies are not impacted by the tariffs? Google, Microsoft, and Meta. The Mag 7, when it comes to impact from tariffs, is relatively immune. And it's funny. Apple's up today, I think, last I checked. That's one of the ones that is. So I look
down marginally. Yeah, right there.
Yeah, it's down. It was up about it was up a little bit about a half hour ago. But I guess my point is we needed a correction. Every correction feels like it's the worst correction ever, and it feels totally unique. They're not. Look at that chart. Pull up the S&P chart, actually. And go and look at the corrections. And I'm going to do a version of this. Go look at the corrections that we've seen since this bull market started. If you pull up the 50 and 200-day moving averages on there too, they all feel different and they all feel like the worst ever, but they're not. We're bouncing here at the 200-day moving average. And so I think now is the time when you want to start to leg in. If you've been patient, it's been 7 days. But I'll tell you this, for a short-term trade, we're absolutely setting up. Like I said, I just bought 25% TQQQ. So.
Yeah, and you're looking at that as something more tactical. You're not necessarily playing it to new highs. You're looking for a bounce and get out, right?
And remember, our franchise is a trading franchise. Mm-hmm. So we're not going out there recommending trades to triple maybe with options we are, but we're not we're not playing for new all-time highs. We're not playing for stocks to double, triple. I'm playing for a quick 5 to 6% snapback in the NASDAQ, a 50% retracement, which, by the way, on TQQQ would have it up 15, 20%.
Yeah.
And this is what you want to counterpunch. In 2022, my strategies with only longs produced like an 8, 9% return with only longs in a market that was terrible. The reason was we waited until it got stupid, until it got like it's starting to feel now. And then we just legged in. Yeah. And, if you got $100 to invest, hopefully you came into this and you were only $50 invested as we were in your trading account, as we were at all-time highs. Now maybe you're at 70, and I'm just going to buy another 5% every down 3% on the S&P in these trading accounts. And I've done this. I did this in 97. I did it in 2000. I did it in 2001. I did it in 2008, 2009. I did it in 2018. I did it in 2022. This is how you trade, corrections and bear markets, if indeed we're in one, which I don't think we are, but, we're prepared.
Well, and Ian pointed out to me a few minutes ago when we were talking that NASDAQ futures actually hit a 10% drawdown earlier this morning. So we got that going for us now, a real pullback, as opposed to some of the piddlier ones that we've seen since August.
Well, look at that chart. Look at that chart of the NASDAQ. It'll pull it back up again. We just went right through the 200-day. And one thing about the moving averages, I always look at it as plus or minus 5% around the moving average. Like, there's no magic to it. I mean, this is the biggest pullback. Pull it back. Let me pull mine back a little bit further. We've been to that 200-day on the NASDAQ exactly twice since the market bottomed.
October 23 and then August at the end. Prices.
Yeah. And I think we're there. But the nice thing as a trader, I don't care. I'm going to buy a bunch of stuff today, tomorrow, in the next week. And when the market bounces, take them all off for 10, 15, 20% returns, and then go back to cash and just wait and see if the whole thing rolls over. But that's the nice thing about trading as opposed to investing. Yeah.
And speaking of oversold, I was looking at this earlier, like small caps have just been absolutely obliterated here. Well below their 200-day. It feels like this is maybe a washout of this leg low right here. But I mean, they're the most oversold. This is IWM, the most oversold it's been since early 2022 when the market was getting hammered.
The only thing I'd say about small caps is I wouldn't touch them right now because you can do better. Why would I buy small companies that are subscale, that are more exposed to interest rates and commodities that haven't been working, that are now oversold, when I can buy great companies that have great balance sheets, that have tons of scale, that are also oversold? So, this is kind of, pull up the chart of Amazon. Amazon, people thought they had a great quarter, and we could talk about tariffs and Amazon and all that. But I mean, Amazon just went below an RSI of 30 after hitting an all-time high at the beginning of February. I'm going to pull up, I've got this sheet that I do that looks at the RSI of, I don't know what it's going to tell us here. It looks at how these things trade after they go through a certain level of RSI. Amazon just went through a 27. It's at 26.67 right now. Let me pull it up. The sheet comes up pretty quick. Folks with the Maverick call have seen this sheet. Let's go here. Okay, here we go. If you buy Amazon, wow. Okay. Okay, that's just for 3 years. Let's go 10 years. The numbers were, hold on one second. Sorry here. Okay, no, so if you look back across the last 5 years and bought Amazon at these levels below a 27 RSI, first off, it's only happened 7 times, which is pretty rare. Like most stocks, I would see 15, 20 times. You made money 6 out of 7 times, 86% of the time with a 90-day view. And by the way, you made money 86% of the time with a 10-day view. There was only once you didn't make money. This is
Hall of Fame batting average right there.
Well, by the way, and that 90-day return is 24%. So if I could go out and buy Amazon today, and I would be buying Amazon, let me be clear. And it's got an 87% hit rate across the last 5 years from this level of oversold. And they just came off a great quarter. It's not like they're off a terrible quarter. And it's on average returned 24%. Why would I buy small caps?
Yeah.
Why bother? Like I can buy one of the best companies in the world, you know? And so, like I said, every sell-off's different. So I know what everyone will say. Well, what about the tariffs? Okay, what about the tariffs? Don't
always
tariffs
what about
change everything?
something? It's always
it's always what about something. That's exactly right. Yet the charts don't lie. Price equals truth. Okay, and so what happens is, the other times it was Amazon, there was something else there, like some other tariff version. So yeah, I think that people should start being, start legging in. I mean, like I said, we in the Maverick, we've taken profits on a bunch of stuff. We've got 10, 11 positions. I will go as high as 2025. I think people should expect that I would be thrilled for the market to continue to sell off for another day or two, because we'll start,
getting really extreme levels.
Yeah, and just buying great companies at great prices. This is what you want to do. And you want to do it in a bull or a bear market. I guess that's my point. Is like, even in a bear market, and at some point in the next, and I hope everyone on this call is a subscriber for the next 10 years, we're going to be through 1, 2, I don't think 3, but 1 or 2 bear markets. You're going to see it's still the same strategy. You buy when the markets get these super, super oversold, but then you buy quality. I guess that's the last part I'd say to your point about the Russell.
Mm-hmm.
You want to buy quality. And when I can buy Amazon with those kinds of stats, why would I mess around with the Russell?
Well, and something too, just to add on to your let's say buying Amazon here, you're working at a spot where you know when you're wrong immediately. Like, if depending upon what kind of stop you want to put on this thing, but you have the previous highs back here from July of 24. You have the 200-day moving average that it's perched on right now. So if it extends lower from here, you could take a small loss and move on, depending upon whatever your strategy is. But this is a great spot to just take a shot, because if you're not taking a shot, you're betting on a bigger market rollover from these extreme levels, which isn't really the best tactical move. Is the way I kind of look at
it. And let's do something. I think this is important. Go back to pull up the S&P, because I know the pushback we'll get. People are going to say, well, what if this is like, what if this is the beginnings of the bear market? So go to the beginning, go to 21, go to December of 21 to the end of 20, to the beginning of 23. Okay. And what you're going to see, look at that thrust down in January. You can see it there, right there. Go back a little bit. Okay. That thrust down. A lot of people are saying this market looks a lot like that. Okay. Well, I'll say, okay, I don't disagree with that from looking at the charts. But look at what happened if you bought after it went through that 200-day moving average. You made, what's that there? That's 7% on the S&P 500. Okay. And by the way, look at something else. 2 months later, you were still higher. You had plenty of time to get out. And do you remember what happened in February of 2022?
No. What happened in February of 2022?
Russia invaded the Ukraine.
Oh.
So people forget all the time when they're looking at this 2022 bear market that was a big effing deal. Like, if you pull up the chart of oil, right? By the way, we were at this time, inflation was tracking to 9%. Rates were going from 0 to 5. M2 money supply was shrinking for the first time. I pulled up a chart of M2. I actually couldn't find a time in my 70-year chart of M2 where it shrunk year over year. Like, I'm pulling the chart up right now. I actually don't have. Let me see how far this chart goes back. I wish you could pull up this chart. Maybe we'll do it on the Maverick tomorrow. We probably will. I got the chart back to 1960, and it never shrunk. But in 2022, which this market looks a lot like technically, we had inflation almost at double digits, rates going from 0 to 5, M2 shrinking for the first time in all the data I have, which is only 70 years. And then if you bought the market, you still could trade it, and you still had 2 months to get out. So you buy this, and you want to be more aggressive.
All right, let's shift gears now to maybe an asset that's more in no man's land than the stock market, and that's Bitcoin. So
Yeah.
we had this strategic crypto reserve announcement on Sunday. And what's funny about this is I was playing with the kids on Sunday morning, not really paying attention to the markets because it's Sunday morning, and all of a sudden my phone starts just buzzing. And I was getting all these Coinbase alerts, and I was like, what the hell is going on out there? And I was like, oh man, everybody's buying crypto. And I didn't know, I didn't see the news story yet. And so I just assumed we were getting some sort of rally. And then when I saw what it was on, I was like, uh-oh, I don't like it now. I don't like that this is that we're rallying on this strategic crypto reserve news. And I don't like the idea, like, why is anything other than Bitcoin involved in a reserve? And what are we doing? Are we just pumping bags here? So the whole thing just seemed off. Crypto rallies into Monday morning and then completely falls apart. I mean, it looks pretty bad. It looks like, I mean, to me, this feels like a lot of people are going to be like, that's it. I'm out of here for a while. I don't think we're going to get like the big FOMO bounce again after the debacle from Sunday into Monday. And we're probably going to go down and chop around in the 70s. If I had to guess, that would be the landing zone for Bitcoin. I wonder if you see this differently than me.
Yeah, I think Bitcoin's got some work to do. I mean, I will throw one thing, and like, it should be clear, I'm not afraid to throw punches and or compliments.
Yeah.
I'm going to say something. Well, I'm going to say a positive first. I actually think that the Trump tariff strategy is quite clever, quite interesting, and has a great potential for success, and really could put us in a great position to attack or to deal with our greatest true challenge, which is China. And I think he's doing a great job of keeping everyone off foot. I think a lot of what he's done in crypto is gross, including those altcoins, which are fine. Solana, XRP, and Cardano, they're very good coins. The idea of them in a currency reserve, in a crypto reserve, is ridiculous. It is literally just paying back crypto bros that helped him. So it's disgusting. That being said, it doesn't really mean very much. Like, I don't think there's going to be $1 trillion in here. I think it's just kind of non-news. I think that what we can say about Bitcoin at this point is that it needs to consolidate here. And one thing I would say, what's interesting about this chart is look how far the 50-day and 100-day still are above the 200-day moving average.
Yeah.
I could see Bitcoin basically seeing all of those merge, which based on the distance would still take another 2-3 months. Sure. And that's pretty normal for Bitcoin. Yeah. Like, I'm just going to pull back. I'm looking back at a 5-year chart. Bitcoin consolidated last year
all
from
year
March.
Yeah.
Yeah. March to November.
Yeah.
And so, and by the way, look, I hadn't even thought of this. Go look at that chart. Go look at that chart of when Bitcoin went. This is interesting. I hadn't looked at this. Bitcoin goes from 40,000 at the end of 23 to 70,000 by March. And then it does nothing / goes down for 10 months before it stair steps again in almost the same increment. It goes from 70,000 to 100,000, and then it trades in this violent range. So look, I let it tell us what it's going to do. I think it's likely to consolidate. I'd like to see before, and with that happening, I'd be more likely to buy a little bit, at the bottom end of the range, and take profits at the top end of the range. I think that, but I want the range to establish itself a little bit more. We just only went down to this 200-day moving average. So I think that crypto is overall, I think it needs to consolidate.
The way I think of that, the way I think of that, like, tactically, is big candles, little candles. Like, we have big candles right now going in opposite directions. I want smaller candles, like, to show me that it's like chilling out and done.
Yeah.
Like you're in a situation like this. This feels like the beginning of a choppy consolidation, not the end of one. Is what I'm getting at.
Yeah, and I think that's true. And like I said, if you just look at what we didn't quite see the same thing happen last year when it began the consolidation. But let me just pull up this chart. I want to really pull up just from the beginning of 24. You know, yeah, the charts look very similar. Like I just be patient. Your candles is a great example. Wait for volatility to go down, and then I would get in there and begin to trade the range. But I'd be surprised at this point. What I will say is this: definitively, I'd be surprised that Bitcoin goes to new highs in the next 2, 3, 4, maybe even 6 months.
Yeah, I'm totally with you on that. Yeah, I think time is important here. It needs to chew on
yeah,
this for a while.
if anything, I'd say why doesn't it just do what it did last year, which is wait until year end and then move on up, especially because that could be the point where we begin to see the crypto reserve actually play a role.
I don't think I can enlarge this, but you can see. I don't know if you can see down here in the corner these Bitcoin seasonalities right here. I mean, like it for the past couple of years, it's been September to December rip. So and the rest of the time chilling out, chopping. So this makes sense. While it is underperforming the past couple of years, I mean, I don't really think that matters. The magnitude of these moves right here, but the direction, like end of Q3, Q4 is Bitcoin's time, and we got a while, and that would make perfect sense. Consolidate until then, chop around until then, get people talking about Bitcoin being worthless until then, and then it can start going up again.
And it's also, I think Bitcoin, of anything that we look at, it obviously trades very technically because there's no cash flow, there's no dividends. We talk about this all the time. Yeah. And Bitcoin goes up because it's been going up. It's very momentum oriented. I know that sounds silly to people, but I think that the consolidation, it's likely to consolidate because it's now in the consolidation phase. Right. And so it's going to take a while to cycle through that. Let's pull up gold, by the way. Let's pull up physical Bitcoin, or what I call gold.
Physical Bitcoin. There we go. This is rocking and rolling.
This did what we said, that it's very extended and it began to correct with risk assets. But then when risk assets tipped over, pull up the VIX, you can see, and what's happened to the 10-year, it began to correct. But I wouldn't be a buyer of gold here, because I think what's going to happen is we're much more likely to see the risk assets, recover some off of oversold levels. Mm-hmm. And gold still has plenty of work to do to come down to those 50 and 100-day moving averages. So, but this is telling you what's happening to risk. Can you pull up the VIX on your?
Yeah, I think so.
So we used to think there's a saying, which I think most people are probably familiar with, called canary in the coal mine. Mm-hmm. Which, just in case people don't know, what miners used to do is canaries are a lot smaller, so they're a lot more vulnerable to changes in the environment. They would take canaries down into the coal mine, and if dangerous gases would come through, the canaries would quickly die and they'd stop singing, and all the miners would run out. So it's a common thing. What's a canary in the coal mine? What's an early warning sign? One thing we always looked at in the VIX, and pull up the 5-year chart of the VIX, is we would look at the velocity of the change in the VIX, how quick. It's a second derivative of this. At first, the change would tell us that we were getting ready for a period of volatility, but after a point, it would tip over and tell us that we were at a market bottom. And so, we're now getting to a point in the VIX where it's also saying that we're likely to hit a short-term market bottom. So, but I want to take this back. What does all this mean? We're talking so much about the market. Remember that in the short term, your trades are going to be defined by the market. You could have the best trades in the world, and if the S&P sells off 5 and the NASDAQ sells off 10, you're going to lose money on your trades. That's just going to be a fact. Conversely, if you can find a point where it's a super high probability bet that the market's going to bounce 5-10%, then you also have your pick of trades. And that's what we used to do in sell-offs all the time, is when the market was sort of in a stable range, we would have a bunch of idiosyncratic ideas. But when the market sold off, sometimes we would sell those ideas because we could buy higher quality stuff that was down a lot and super oversold. And that gets to my Amazon right now. Like right now is a time you want to be buying quality, some of the best companies in the world because they're materially oversold.
Yes. Yeah. I totally get that. And, when markets go down, they tend to be more highly correlated too. And everything, babies in bathwater, that's how it goes. So that makes total sense. Sell those good ideas. You can buy them back, when you want to. So that makes total sense to me. Let's move on to, I guess, another elephant in the room type of stock that everybody's talking about right now, just to get your take on it. And that is Nvidia and the semis. And then I'll put the moving averages back up here for us. So Nvidia did not rally after earnings, and earnings were good. But as we talked about, I think you said this. Correct me if I'm wrong, but you said maybe good isn't going to be good enough in this particular environment for Nvidia, and I think that's certainly what we got right here. And now, it had the positive reaction in the morning after, and then it slowly turned into this nasty, ugly, bearish engulfing candle. We've been down ever since. And now we're right back down to where we were back in September. I don't want to say that this feels like toppy, but it doesn't look great, and it's dragging the entire sector down. Do you think that this is a warning sign for the market? Do you think this is bigger than just Nvidia, or do you think this is just maybe the hype cycle for Nvidia is kind of running out of steam right here and needs to reset?
I mean, it's a couple things. I think that this sell-off in the last few days isn't an Nvidia sell-off, it's a stock market sell-off, and Nvidia is just a mechanism for the stock market. That's kind of and that's why I'm getting more excited. So that's the funny thing is this is going to sound perverse to folks. When individual stocks are down, I may or may not be interested. When all stocks are down, I get very interested because now I see things that are driving, like this Amazon situation. Look, I think Nvidia's in a consolidation phase, and I just think Nvidia doesn't matter so much for the market anymore. JC Peretz, who does a great stuff with All Star Charts, I read a note of his, and he pointed out, and I was going to pull up some charts. I'll try to have them for the Maverick tomorrow. I just read it like an hour ago or whatever. That what we've also seen in the market is rotation, right? So it feels terrible. It feels much worse to a lot of investors because they all owned all these big winners. They own the Nvidias, they own the Talons, they own the Broadcoms, etc. And those have all corrected a lot because everyone owned them. The rest, until the last day or two, like financials were all at 52-week highs. We'd seen industrials at highs, all these different things. So I just think it's like my conversation about inflation and interest rates. I don't think we're now in a phase of macro where inflation and interest rates don't matter so much. I kind of think Nvidia doesn't matter so much for the market. And, which gets back to, I said Nvidia will lose $1 trillion. It lost $1 trillion. I think Nvidia is okay. I would even buy it for a bounce. And I'll tell you why I say that. The numbers were great. Right. Nvidia is not going from 80% revenue growth on a $30 billion revenue number to, crapping out in the next quarter. Ain't happening. So as long as the numbers are okay and the stock's not expensive, I think it's fine. And that kind of just speaks to the whole market, right? Is I think that after, if anything, pull up the chart of the S&P 500 again. Sure. We got so extended right after the election. We basically traded. We were a little extended, traded in that 50-day moving average. We're just working that off. Yeah. And I sometimes talk about, when we talk about consolidation, that time is as important as price. And what does that mean? What it means is that, when you're going through these consolidation phases where you're kind of shaking out weak hands and stuff, there's some people that get shaken out in the first week and some people that get shaken out in the 10th week. It kind of doesn't matter what the price is. So when we would get ready for corrections, we always would say that. This is why I say dollar cost average or legging into positions. So again, I'll just use the Maverick, and it's perfect. It actually speaks to what you've done. You've got one trade on right now.
Yep. Mm-hmm.
The Maverick, we've been taking profits aggressively when we've had them. We're sitting on about 10 positions. We could be 20, 25. We could even be a little bit more. I've just been patient because I felt like, we needed to do some work to consolidate. And, now we're 1, 2, 3 months in. Now I'm getting interested. We're at the 200-day moving average with 3 months in. Sentiment is terrible. And again, I'll pull up these charts tomorrow on the Maverick. It's just awful. Now it gets really interesting from a market standpoint. And the frustrating thing as a trader has been that prior to really probably this, I don't know, maybe the last couple of weeks, a little bit in late December, early January, it's just everything was so extended. You were finding individual setups, but you had to work for it. So let's do this though. Does anyone? I want to go through some tickers. Like we did plenty of macro, and again, we're not trying to turn this into the macro call, but right now tariffs matter.
Yeah.
It's played a role. So I wanted to see if we had any tickers that people wanted to throw in here, for us to go through. Let's see what we got here. We can go through some of the old favorites. Look, I think that people maybe talk about Rigetti and all these the quantum stocks. Look, I don't want to say I told you so, but we told you so. It's funny is when these stocks are at these highs, like everyone just, it's like you're like, no, they will never go down. And then we looked there and we said, oh, where it's going to? It's going to trade to between the 200-day and 100-day moving average.
There we are.
Guess where it is? Right now it's at the 100-day. And I'm going to tell you, this stock's going to have a 5 handle on it before all said and done. Now, from there, I don't know what the heck's going to happen. But I'm going to say one other thing. This movement, this squeezing out of the quantum stocks, of crypto, even of the AI stuff, it's healthy. It's good. Yeah. What scares me, and I've been pulling up this chart, I spent a lot of time thinking about bear markets, okay? We're in the middle of a great bull market, and I spend most of my time thinking about bear markets. That's why I feel good about making money. What scares me is 99 when the NASDAQ went up 80% in 3 months. What scares me is 2008 when people were flipping contracts on condos. What scares me is early 21 when GameStop, AMC, Bed Bath & Beyond, NFTs are blowing up. Yeah. I don't see that. If anything, I see natural corrections happening and all this stuff. So let's go through. Should we do a couple of these tickers? We're getting some in here now.
Yeah, let's do ASTS. I got a list. Let's do ASTS. That was one, and that's this actually doesn't look too bad. We took triple-digit profits on this one, and I got out of the way when the market started going south. But this has been holding its own, and it actually held its own after earnings, which is pretty crazy. I don't know if I would try to grab it right now in this environment, but the chart doesn't look terrible by any stretch of the imagination. It looks like it's consolidating.
It does. And, normally I look at stocks that go from 2 to 20 and they sort of concern me.
Yeah.
But the longer they stay up at 20, the less they concern me. Because it's shown that it can get, that it's shown some progress. So I think this one's very tradable, within a range, and we've now established a range. So I think it's okay. Up here, yeah. I mean, again, I don't know in this particular sell-off, would I be slamming into this stock in a big way? I don't know that I would. I just feel like there's better opportunities that are maybe a little bit less speculative and all that. But I think this one's okay. And I'm surprised to say that, actually.
Yeah, I echo that. Like, I don't know if this is the best trade out there, because I think it could be susceptible to, like, if we do get like another like quick whoosh before this market bottoms out, it's very it's very possible that this thing gets sucked down the tubes with it, just because of the nature of where it is in the market. Well,
and look, I'll say this: it went from 5 to 40, and it didn't do that because earnings went from $1 to $20. Because that's the one big difference with Nvidia. And why I'm very concerned about Nvidia, especially a year out. But Nvidia was very real. They went from earning, I'm going to do this off the top of my head, 5 billion to earning 30 billion. Yeah, so the stock went up sixfold. That didn't happen to ASTS. But the longer it stays up in this range, I think it's tradable. But I'd say it's probably a do nothing right now.
Yeah, that's fair. Let's go Starbucks.
Starbucks.
Your local.
I like actually, did I ever tell you this? My town here, which is supposedly the beginning of New England, called New Milford, it's got 6,000 people, and we have 6 Dunkins. We got 1 Dunkin per 1,000 people. Like
that's actually low. That's a very low number for New England.
You think?
More?
I don't know. Like, I'm a New York and Arizona guy. I don't know about this Dunkin'. I like Dunkin'. Don't get me wrong. But
well, the joke is in New England, you have to have a Dunkin' on every corner of every intersection. We
literally do. Like it's like 1 per 1,000 people. I would struggle to buy Starbucks here.
Yeah, it seems like it's nosebleeds.
It's super extended. I think there's a very nice narrative. The narrative has not met up with the numbers. If we look at the earnings revisions, they still, just to be frank, suck. And one argument would go to say that the stock is front running the change in the narrative, but with an RSI recently above 80, I would rather let the stock front run the narrative in a less extended manner and or have the narrative begin to match the stock. So yeah. I would take profits on Starbucks, and I'm going to tell you one more thing. This is actually quite interesting. Look at that pattern in February where the stock went up almost every day. Yeah. It reminds me of the pattern of what happened to both Meta and Apple. We've seen these go up every day, and then look at what happened to Meta and Apple after the pattern that it went up every day.
They went down every day for a while.
It went down every day. David Hankin, we would buy Amazon. I said that earlier in the call. I said Amazon's a buy here.
Yeah, and then Apple was in December, did the same thing.
Yeah.
Right here.
Apple.
Then it went down every day too.
Exactly. And then now, and I'm pulling up the charts with you. Now look at Meta, which you might have pulled up while I did it.
Yeah, I did.
Meta went up, and then it went down every day. So Starbucks is Meta and Apple, except there's a difference. Starbucks numbers stink, and Meta's numbers are awesome. So, I would absolutely sell Starbucks here.
It's because Starbucks coffee isn't that great. I like the blonde roast.
I've never had a cup of coffee in my entire life.
What?
You didn't know that?
No.
Yeah, my mom every morning. My dad was a heavy smoker, so I never smoked. And my mom would have coffee every morning. She had really bad coffee breath. Not that it was bad breath, but I was a kid. I was 5 years old. I was like, gross. I've had 1 sip of coffee my entire life. And then I got to a point in my 30s where I'm like, this is a pretty good streak. I think I'm going to keep this one going. So
you are the most productive non-coffee drinker I've ever met.
Yeah. I drink tea and caffeine and Diet Coke and you name it.
There you go. Okay. So you do get your caffeine. That's what counts.
Yeah.
All right. Here's Uber. Uber was the next one right here. Did not want to get over 81 right there. That's where I was looking at it to seeing if it would get a nice breakout, because I have this line that I drew here, this very unscientific line. It looks like it's resetting here. It just got sucked down with everything else. I do think that longer term, it's probably setting up for a bigger breakup, but probably needs weeks, more time, and needs the market to improve a little bit. But I don't hate it, but I'm not grabbing it here.
I think Uber's a coiled spring. The earnings revisions have been great. Stock's done nothing. I think it's a big idea. It's got a big narrative. This is more of an investment than a trade. I got lots of trades for folks. But I think it's really interesting. And just, this is going to be an ideal trade for you. Uber is going to be something that at 85, you're going to make people a ton of money with options.
Yeah.
But I like it. I like Uber a lot. The revisions have been, they've done a great job. They're incredibly well positioned. I just don't, I don't have high expectations in the near term. How about that? Not that I have low expectations. I just don't think it does very much.
Yeah, I think it needs time to chop along here. And I think it could form a nice, this big consolidation zone going all the way back to early 2024. I mean, it's been a year where it hasn't been able to hold above $80. If it can get above 80 and stay above 80 for any reasonable length of time, I think that we'll see a bigger breakout in the stock, but that's probably going to take a little while. All right, what's next here? We have AUR. AUR. Do I know that one? Bet you Enrique knows it. Aurora Innovation.
I don't know this one at all. No, hold on one second.
We found a stock you don't know? Oh.
No, I'm like Kramer, if I actually know what I'm talking about. Actually, I by the way, I've said this before. I love I think the world of Kramer. I really do. I think he's a very smart man. $11 billion market cap, self-driving technology to move both people and goods. Pittsburgh, Pennsylvania. That is a nice looking chart. Holding those moving averages. Let's just look at the money chart, which is the earnings revisions. I get the sense it's got decent, the company's losing money, which, I don't necessarily love. I don't know much about, but it's been moving in the right direction. Revenue has been moving, let's see, I'm going to guess revenue revisions have been going the other way, but I mean, it's not a lot of revenue. They're doing 5 million of revenue in 25. Yeah. This is going to be one where I'll say, if I just have the chart's good. Like, everything else, $11 billion companies with no revenue, I don't know. It puts up a yellow flag. I'd have to dig into it more, but chart looks good, as long as this is one though, that like, I would really want this to hold this 50 and 100-day moving average. Yeah. When you don't have that support beneath you of like valuation or revenue. Right. And anytime you say to yourself, well, I really like the company, but they don't really have any revenue. That's probably more than a yellow flag. That's an orange flag. It's like, it's a great company. They don't have any revenue, but like, unless it's biotech, you really need to think about, this company is supposed to do $750,000 of revenue in Q1, $734,000 in Q2. Yeah. It's got a nice chart. That's the most I can say. Everything else is orange plus flag to me.
Well, you can tell by looking at it, this trades like a small speculative stock because the rips always just get reeled right back in. I see that. That's why I was surprised by the market cap at 11 billion and 1,800 employees. I mean, we're doing stuff real time here. When I look at something like this, I'll tell you the first thing that I then begin to get concerned around. Like, let me just give you some data here. This company, okay, here's the concern. They burnt $600 million in 24, $600 million in 23, $500 million in 22. This company's burnt $2 billion in the last 4 years, and they've got $1.2 billion on the balance sheet. So you got 2 years of cash burn. I'll say this: it's a nice looking chart, but everything else says to me, like, unless I have a real edge, I'm not trading this stock. Nice looking chart with 2 years to live, and no revenue. Doesn't give me. Warren Buffett would not call that a high margin of safety. Let's just put it that way. 2 whole years. Yeah, he got 2 whole years. Yeah, a lot can happen in 2 years, I suppose. All right, I've seen a couple requests for Intel. Intel tried to have a nice post earnings like drift rally right there, and it's just getting crushed right now. So I mean, another hard reset.
You don't hear me on these kinds of things very often. I think Intel's very intriguing. I think I'll say a couple things about Intel. I wouldn't buy Intel right now because I can buy stuff that's working and it's got great operating momentum and is down 30%. Talon, people were asking about that. Don't go there yet. Okay. Intel's the stock that I buy or I would want to own when the market's at highs and I'm struggling to find ideas. I'm fundamentally constructive on Intel, and that's a little bit of what's happening because it's same thing's true of Uber. Uber and Intel are names that I would own, a month ago or 3 months ago when I'm struggling to find stuff. Right now, I have awesome companies that are down 25% in a straight line. why wouldn't I buy them? And let's go to Talon, which people know I've been very vocal on. Thing hit a new high 7-8 days ago. It's 250 to 183. Company's buying back a ton of stock, is not expensive. Like nothing's happening in power prices. You buy this all day long. So this is, and I guess that's my point. We talk about Amazon's the mega cap version of this, Talon's the 10 billion. This is where you want to be rotating into. Like, so it kind of gets to ASTS and all these things, and Aurora, and Intel and Uber. You don't need to mess with those names right now, because I can buy this thing down. I mean, what's 25, 63, 67, down 27%. And it's an awesome company with great momentum buying back a ton of stock. Well, why wouldn't I do this? I'd even go so far that I would sell other stuff that I have that's down. Sell your Rigetti and buy Talon if you happen to own Rigetti.
Yeah, I like it.
Hopefully, folks didn't own Rigetti after all everything we said before.
Well, I think they like trading it. So there's a bunch of other semiconductors here in the chat. See, people are asking about SMCI and MU. I don't know if you have any opinion on any of these. SMCI, I mean, are they still, and I'm way behind on the drama with them and their accounting. I think that's closed now.
Ernst & Young walked and said, we don't feel good about doing this, being with this company. And then they got another accountant that said, okay, yeah, we'll take it on. Yeah. Just don't mess with it, man. Just don't mess with it. Life's too short. Literally, we got 4,000 liquid stocks. Why do you, so a major accounting firm said, I should find the comment, because it wasn't like they said, oh, we're not really sure. Let me get the, it was let me see. Let me get the. I want to read the words. Hold on. Tanks after it was Ernst & Young. Yeah. Okay. October 30th. Here's what they said. We are resigning due to information that has recently come to our attention, which has led us to no longer be able to rely on management's and the audit committee's representations, and to be unwilling to be associated with the financial statements prepared by management. I'm going to give you a life rule. Don't. Yeah. Just don't do it. Okay. So I this thing tomorrow could be back at 70, 80. And you know what? It's I'm trying to, it's you could play with, fireworks and drinking, and that might work out spectacularly and that'd be a really great night. But you know what? If it ain't, it's a really, really bad night. It's really kind of binary. And I just wouldn't touch SMCI with Temple. Well, why? You could do, you want to own data centers? Buy Talon. Talon's a data center play, and the accountants didn't disavow them. So yeah, this is an easy avoid.
Oh no, I have breaking news. The chat has been infiltrated by Matt.
I see that.
He's asking what we're buying. Credo earnings tonight. It's bouncing here. Attempting to bounce.
Let's talk about Palantir.
Palantir first? Okay.
Look, as a trade,
I'm
going to tell you a couple things. Palantir, when they report numbers, they're going to beat numbers. That's going to be in, hold on, let me pull it up, May 6th. So we've got, a couple months. I think that trading would say that the stock bounces off this 50-day. Mm-hmm. You're pretty oversold. I'd also say that I think the sell-off in the winners is a bit overdone. Mm-hmm. But then I'd finish with, I've got a dozen names that I like more than I like Palantir, because they're not trading at 743,000 times sales.
Okay. That's
so I think Palantir is a good trade. It is a good trade. It's a good trade. I just don't, it doesn't make my top 10, but it'll probably work. Credo, I don't even know where Credo came from. I'll just put this on here. I guess Matt's asking Credo, so I definitely have to answer the question. Look, the company blew them away. last time. Stock traded up 50% on those numbers.
Mm-hmm.
The stock reports tonight, I'm going to go with they're going to blow away numbers and the stock's going to be up. And I'm looking, and I wish I could pull up this chart for you. So they beat numbers. They missed a little bit the previous quarter. But here's the moves around earnings. Up 50, down 15, up 27, flat, up 5, up 23. Look, I think a body in motion tends to stay in motion. I think they're going to report a good number. And with the stock down, and this is what I say often about these, if we were back at these highs, if we were at 85 going into the number, I'd be very scared. It's like, by the way, I was scared with Palantir going into the number. I thought they were going to beat numbers, but it was super extended. Palantir still went up. But at 85, extended for the 50 and 100 day, I'd be terrified. Down here, by the way, we closed that gap. We closed the gap from December. Yeah. Look, I think you could buy this stock and it could be up 20, 30, 50%, right away. This is a very, very attractive speculation.
Ooh, Matt, are you feeling less bearish now that he's talking about these things? I hope so, because Matt was saying in the chat that he's in full-on bear mode and he needs to listen to Enrique more.
Well, I mean, look, your bearishness should come down as the prices come down. We'll talk about the Maverick ones on the Maverick call tomorrow for the people who are asking. So we got someone here. I'm just looking at it, talking about ARQQ, some quantum stock. It's the same stock as we're getting. This one's just completed the set.
Oh, yeah. Same chart. Yeah,
same chart. I mean, look, it started at 6 and it's probably headed back to 6. I can't say this enough. What's the message of this? So I've got 2 messages. Well, I got 3 messages that I take away from today's call. Number one, I must be a lunatic, but I actually think Trump has a real plan. Okay. And so I'm pretty constructive of that. Number 2 is we've now gotten to sentiment oversold levels that, actually there's a lot of attractive stuff out there, which wasn't the case 3 months ago. We were struggling, especially when I launched the Maverick. But number 3, this is the most important one. Right now is the market where you buy Amazons and Talons and you sell your ARQQs. Get rid of them, dump them, and buy real companies that are down 25%, because I don't know, maybe this thing will go back to 40, but that's a low probability bet. Amazon and Talon, those are very high probability bets that those companies are going to do just fine, if not awesome.
Nice. Well, I think that's a good stopping point right there. We hit a bunch of good tickers. Enrique, I like how you kind of bring us out of the haze of all the negativity that's been surrounding the market over the past week or so. Such a big straight down move. Everybody gets all bearish and sad, and then you come in here and you say, this is the time you should be thinking about buying these things. It's great.
Well, I'm going to tell you something probably way too personal.
Oh, no.
Hold on. I grew up with a lot of trauma. I had a really tough childhood. We were homeless for a bit and all that. And so it rewired my brain that I was used to living in trauma and and just really crazy stuff going on. It's actually one of my superpowers as a trader, because when the market starts getting crazy, I calm down. I get really nervous. This is in life. When things are going well and everything's cool, I get really nervous and antsy in life. I'm waiting for something to go bad. But when things are terrible, in the stock market, I'm really cool and I'm really data oriented. And so and that's what you need to be, right? Warren Buffett, be greedy when others are, would be fearful when others are greedy, and be greedy when others are fearful. This is the time to start to be greedy, man. You got great stocks, Amazon, Talon, Credo, buy Credo. Okay. They're going to report a great number. Worst case, it's down 20%. Best case, it's up 50. But it's going to be a good number no matter what. So
I'm going to put that in my Enrique book, something to come back to next week once we know what the number is and the reaction.
We'll see. It's a Credo, actually a really cool company. I think Credo could be a 5-bagger, 10-bagger from here. Around these numbers, it could be very volatile, but it's a great speculation. That's the kind of thing you want to be doing. Amazon, Talon, Credo. That's what you want to do.
All right. Well, thanks for your time again, Enrique. And thanks to everybody that submitted tickers and questions and all that good stuff. And we will see you back here same time next week for another episode of Top Trades. Catch you later.
Stay safe. Talk to you soon.